If you've been struggling with trading or you're just starting out, this is the only video that you will ever need about trading. Because in this video, I'm going to break down the simplest, easiest path to consistent profitability. No fluff, no hype, I'm not going to leave anything out, just a full guide, the easiest way to become profitable. Let's go. Alright, so I've created this entire overview and this is the roadmap to the easiest way to become a profitable trader. It's a complete guide. It's a no fluff complete guide because there's too much fluff on YouTube regarding trading, getting profitable. So this is the roadmap, and I wish I knew this when I started. The roadmap to become a profitable trader as easy as possible, and it's still going to be hard, but this is the easiest way. So I want to start with explaining what do we actually need to win. And the first thing is a working, robust trading strategy that captures proven effects in financial markets. That's the first thing that you need to focus on. The second thing is the ability to execute without mistakes, psychology. And then the third thing is risk management and proper funding/allocation. If you have these three things in order, the three pillars of profitability, you are a profitable trader. Anything that's not on this list should not be focused on, because those are all extras. The main job is to get these three things in order. That's going to allow you to become profitable. That's going to create the income from trading that you want. Now, an example of proven effects in financial markets is, for example, the momentum/trend effect or the mean reversion effect, which is very persistent in indices, for example. Also in other markets, but very persistent in indices. Momentum trend is very persistent in stocks, in commodities, in crypto, especially in crypto. We will dive into that later as well. If you've been trading for a while, the reason you're not profitable is because of one of these three things. And usually it's number one. So identify which one it is for you and start working on it. And I'm going to give you tools to work on that. Now, why do most traders fail? They trade a strategy that they think works because insert your favorite trading guru told them it does. However, if we would run the actual numbers, they would see the strategy doesn't work. And the first reason, the number one reason people fail with trading is not psychology, which all the trading gurus are going to tell you. No, it's you trade a strategy without edge. That's the main reason people lose, because most strategies just don't work. If most strategies did work, anyone could be profitable. It would be very easy. But the fact is, most strategies, conventional strategies that you find on YouTube, do not work. And most people blindly follow these strategies because the people that explain the strategies are convincing, have maybe a very big YouTube channel, so people believe it. But it's not true. Most things don't work. Psychology is not the reason you fail. Your strategy simply doesn't work in most cases. Now, another thing is that most traders choose, unconsciously, the most difficult way to trade. So they trade the most efficient markets, such as Forex, which has high competition. They trade the lower time frames because everyone wants to be a day trader and only trade for 10 minutes a day. And they use subjective trading strategies such as conventional technical analysis. And they also have high trading costs because of the low time frame and the high frequency. Now, if you blend this all together in a cocktail, it's a cocktail of misery, because this is never going to work. And yet most people trade like this. So this again is the main reason people fail. So this is, like I said, what every YouTuber teaches you. Day trading Forex using support and resistance, supply and demand, smart money concepts. It's a recipe for disaster. But they teach you this because it looks cool. So when you see it on a chart, you really think, wow, this looks amazing. He's doing a proper analysis. It looks very good. Oh, the price actually reacted to that zone. It looks very cool. But the thing is, if people follow those gurus and they don't get results, it's your problem because you just don't seem to get the right level, while the guru always does in hindsight. So big issue I have with the trading industry. Main reason people fail is just blindly following these people and then following them into the cocktail of misery, which is this cocktail of trading the difficult market with the highest competition, the lowest time frame, the highest cost, and also subjective stuff That's just really difficult to master, especially if you're not profitable yet. So that's why most people fail. They make it insanely difficult for themselves and they follow the wrong people. Now, what's the easiest way to make money in trading? And it comes down to this: playing at an easier poker table. The more efficient a market is, the harder it is to find edges, profitable strategies that outperform, and the harder it is to outperform the market that you're trading. A solution then is pick a market that is less efficient and that has less skilled opponents. Crypto, for example. There is way more competition, way more institutional money, way more big players in a forex market compared to crypto. Crypto has way more risk. Crypto is a lot more volatile and therefore also emotionally driven. As you can see, a lot of retail is going in, and when there's a big move, everyone on the news is talking about it, everyone's getting in. And that's way less evident in Forex. Forex is way less volatile, way more professional. Crypto is a lot more volatile. So yes, it carries a bit more risk. But if you know what you're doing, you don't act like a cowboy, it's easier to find an edge in crypto because it's the easier poker table. So to summarize, make it easy for yourself by trading the less efficient markets, which is trade where are less professionals, which is a more volatile market, which is crypto, for example. Just by switching from Forex to crypto, you make it so much easier for yourself because the competition is just a lot lower. So that's the first thing you want to do. Now, the other thing is that there's a very big lie that a lot of people are being told is price is fractal. Every time frame is the same. What works on a daily time frame also works on a 5-minute time frame. That's a lie. It's not true. Price is not fractal and time frames are actually different. So when you take a look at this graph I created, it's not an actual graph, it's just a visual representation of the truth, basically, but not the actual numbers. It's basically the noise per time frame, and the lower time frame you go, the more noise there is on this time frame. And the higher you go, the less noise and the more accurate a signal is that a certain strategy provides. The lower the time frame, the more noise, and the harder it is to differentiate between noise and signal. So think of it like this. It takes way less capital to create a huge M5 candle compared to a huge D1 candle. One shows persistence in order flow from one side, which is on a D1. The other one might just be random price, and that's on the lower time frame. So on the lower time frame, when you see a big candle, you tend to think, okay, let's get in. Or your strategy might think, okay, this is an out of proportion candle, let's get in. In reality, it might often just be noise. And that's another reason people fail. And to make it easy for yourself, start with the daily time frame. It has less noise. You have less trading costs because you don't trade it often. And when you use stop losses, they are bigger. So you have probably less gaps against you, less slippage against you. And you will also have smaller position sizes, which is less commission. And also you will experience less emotions because it's not going like that. It's slower. So that's another tip. Trade less efficient markets and trade on the higher time frames. Then the next thing is the easiest way to make money in trading. Subjectivity sucks. And what most people do, so most traders, open a chart, do analysis for an hour, draw lines, order blocks, whatever they use. And there are so many things wrong with this because doing technical analysis is something everyone can do. Even a kid can draw a support and resistance line. That's like basic stuff. And technical analysis is also very, very subjective. It's a discretionary trading style because if I give the exact same chart to 10 people and I'm going to say, okay, you can draw 5 support or resistance lines, the charts I get back are all going to look very different because it's so subjective. And the issue with subjectivity is that you want to get a sort of consistent results, although your trading from your income from trading will never be as consistent as income from a regular job, but you want to get long-term results. And when you use that much subjectivity, you don't know if you can replicate the way you pick your levels right now, 10, 20, 30 years in the future. So there's a risk there. The next thing is that success with discretionary trading relies on experience. Picking the right levels, avoiding the wrong one is something experienced traders might be able to do, but if you're not profitable yet, or if you're a beginner, you don't have the experience yet. So it's a very suboptimal way of trading or learning how to trade as a beginner, and yet most people do it. And the other thing is that drawing lines is not a strategy, rather it's a concept. So what a lot of people, especially here in the Netherlands, think, they follow a trading course, they teach them how to draw a line on a chart, and they think they're like 90% there, that they're 90% of the way to profitability, while it's not even 10%. It's not even a strategy. It's literally drawing lines on a chart. That's not going to work in the long run. So you need a proven, concrete, robust strategy that captures an actual effect. I wrote down objectivity rocks. And look at this example. So let's compare this to what most traders do. If price breaks the highest high of the last 20 days, I will buy. And if price breaks the lowest low of the last 5 days, I will exit my position. This is so objective that anyone with common sense can spot this on a chart and without hesitation can get in, because there is no gray area, there is no subjectivity, it's very clear. It's so clear that you can even automate it. You can even objectively generate a backtest to see, has it worked in the past? How well has it worked in the past? Is it even robust, etc. It's very objective. And this means this does not rely on experience, but simply following these rules. So let's just pretend these simple rules are profitable in the long run, which I can tell on a certain markets it is. But let's say, so these rules are profitable. Then your only job becomes executing these rules without mistakes. And it's not going to be analyzing, drawing the right levels. Or maybe you're a bit off, maybe you're on, having doubts, subjectivity, etc. This is not going to rely on experience. It's simply following these rules consistently over and over again. While if you trade discretionarily, you do need a hell of a lot of experience to even make that work, because it's so subjective. So that's the benefit. This is automatable. You can do a quick automated backtest. You have objective rules, it's less stress, and you can even automate the execution of this particular strategy. So if you are not profitable yet, do not trade using discretion and subjective technical analysis. Recipe for disaster, since success with this method relies on experience, which you don't have as a beginner or learning trader. Yet, this is what every YouTuber teaches you, and this is the reason you fail and so many fail. Do choose a mechanical objective trading style. So the easiest way to make money in trading, let's put it all together. The easiest way to become profitable is by choosing a market that is less efficient and has less competition, crypto. Doesn't mean you cannot trade other markets, doesn't mean I don't trade other markets, but it does mean if you're not profitable yet, your goal is profitability. And that's the easiest way to do it. And then afterwards you can add other markets, whatever you want to do, but focus first on profitability, and that's the easiest poker table you can play at. Now, the other thing is, the easiest way to become profitable is to trade a time frame with less noise and less cost drag, which is your daily time frame. So crypto, daily time frame. The easiest way to become profitable is to trade a mechanical/systematic strategy that removes gray areas and discretion, and that captures proven market effects such as mean reversion and momentum. So that's the third thing. Now, when you look at this graph here, so this is a simple momentum strategy in crypto. This is particularly Bitcoin, and as you can see, the blue line, it's a bit small, but the blue line means what if I bought and I held Bitcoin from 2014 until now? That's the return. If you traded this momentum strategy, you massively outperformed, and I know it's a backtest, but this really shows that simple momentum strategy works really well in crypto. Because if you do this on gold, for example, it's still going to work, but the outperformance is going to be a lot less, or there won't even be any outperformance, because that market is a lot more efficient. So this really shows, pick the easier poker table. So this is a simple strategy, momentum in Bitcoin. It works on other cryptos as well, by the way. That's very important. If you develop a system, works in Bitcoin, not on any other coin, please throw it in the bin, because it's not going to work. It's simply capturing momentum effect. I won't give you the exact strategy here, but I'm going to give you a quick tip. Ask this to ChatGPT. Give me an example of a professional short-term momentum strategy, several days holding time for crypto. It's going to give you a lot of good ideas that you can use to build your own crypto system that outperforms the market. Happy testing, happy discovering. Did you like this video? Please leave a like, comment, subscribe for more. I want to thank you for watching and I'll see you in the next one.